This agrochemical specialist just delivered a blockbuster Q4 with revenue up 20%, EBITDA rising 37% and PAT surging 28%, all driven by a favorable Rabi season and expanding crop acreage. With global ambitions through a Bayer AG deal, cost efficiency from local manufacturing and stock rising from rupees 614 to rupees 1620 in just 2 years, giving investors a 164% return. This homegrown leader is sowing the seeds of global growth. Stay tuned to uncover this agriculture outperformer. Hello and welcome to another exciting edition of Noisemaker, where we sift through the market buzz to uncover high potential small cap opportunities. I am Nishant Prasad, Equity Research Analyst at Desvelado Advisory. In today's segment, we will spotlight two companies making noteworthy moves in their respective industries. Please note, this is not a buy or sell recommendation of any kind. Today's lineups include Dhanuka Agritech Ltd and Shree Pushkar Chemicals and Fertilizers Ltd. First company, Dhanuka Agritech Ltd is a key player in the Indian agrochemical space, manufacturing herbicides, insecticides and fungicides across liquid, dust and granule format. The company delivered strong Q4 FY25 results with revenue up 20% year-on-year to rupees 442 crore, supported by a favorable Rabi season that saw a 2 to 3% rise in crop acreage and healthy winter rainfall in key states. EBITDA grew 37% to rupees 110 crore, while PAT increased 28% to rupees 76 crore. For FY25, revenue rose 15.7% to rupees 2035 crore, driven by strong crop protection sales. The company is targeting revenue of rupees 2000 crore in FY26 and 2300 crore in FY27, led by approximately 15% growth from the core business and approximately 2% contribution from the Bayer AG fungicide portfolio, supporting overall top line growth of approximately 17%. Next company, Shree Pushkar Chemicals and Fertilizers Ltd operates across dyes, dye intermediates and fertilizers, serving both B2B and B2C markets. The company reported strong Q4 FY25 results with consolidated revenue of rupees 219 crore, up 15% year-on-year, and FY25 revenue of rupees 806.3 crore, up 11% year-on-year. If we talk about EBITDA for Q4 FY25 stood at rupees 24.7 crore, which is up 31.9% year-on-year, and PAT rose to rupees 16.5 crore. Fertilizer volumes grew by 24.4% in FY25, while chemical volumes declined slightly by 1.1%. Also, the company approved a rupees 1 lakh cash acquisition of 100% equity in Dyecol Technologies Private Limited, a newly owned only subsidiary to handle marketing and strengthening its presence in the dyes and dye intermediates business. Now, summary of today's recent filing. Dhanuka Agritech Ltd reported 20% year-on-year revenue growth in Q4 FY25, expanding globally via Bayer AG deal eyes rupees 2300 crore revenue by FY27. Shree Pushkar Chemicals and Fertilizers Ltd Q4 PAT up 26.5% year-on-year, acquired Dyecol, setting up solar plant to reduce cost and scale fertilizer and chemical capacity. So that's a wrap up for today's Noisemaker. For more details, check out the full report in the description below. Stay ahead, stay informed.